Where does inflation go from here? Will we see a soft landing or something worse? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so inflation, highest level in 40 years, and lots of speculation right now as to where we go from here. What is it? 8.5%, 9%, and the real inflation that we're all feeling when you appropriately account for shelter, housing, right, and some other areas. It's a lot higher than that. Well into the double digits is what we're all feeling, okay? So where does it go from here? Lots of economists are actually saying this is peak inflation. Did a video about that even a couple weeks ago, how a few were saying, here's why it's peak inflation and inflation will come down from here. I struggle with that, guys. We still have a Russia-Ukraine crisis that is causing some distortions in commodity markets, okay, as well as some disruption in the global supply chain. And on top of that, speaking of disruption in global supply chain, how important is China? And China's in lockdown and has been in lockdown for, even by the time you consume this, if China has opened back up, they've got so much pent up issues that that is causing some disruptions as well. Guys, it's hard. I'm not a forecaster. Hard to imagine that inflation is just going to, shoot sharply down from this point forward. So with inflation being a tax on everyone and a very painful experience, what are the paths forward from here with inflation? So this first path, many people, I'm hearing more and more people say that this is what they believe. And I think it's more of a hope than a reality. But that is, people believe there's a path forward with inflation, that it will just naturally slow down, naturally calm down. That inflation is self-regulated. And here's their logic, okay? It is logic. That, well, because we're in a supply-demand capitalistic society, that as prices go up so high, demand will naturally dissipate, and therefore prices will have to come back down to meet demand. Yeah, that is in essence how a supply chain economy sort of works. Okay, if that a supply and demand economy sort of works and set prices. Here's the problem. Okay. That is how it would work in a non-influenced or non-tampered with economy. Our economy has been tampered with. Take a look at this. If we all of a sudden saw a spike in tulips, at some point we would say the price of tulips would come back down as long as things weren't tampered with. But guys, there has been tampering in the money supply, in the amount of money out there. If you're taking a look at this chart here, we've seen the highest increase in money supply during a 3-year time period ever. So this inflation, in my opinion, didn't come out of just anywhere, okay? It wasn't just this all of a sudden surge in demand for tulips that will come back down, or there will be a lot of people starting to produce more tulips, and therefore the supply would increase. No. This was manufactured. It was tampered with because we printed so much money and increased the money supply by 50%. Now, looking at this tweet, the last time the money supply was increased by greater than 40% in a 3-year time period, massive inflation followed by recessions, bear markets, not lots of bad stuff. So in my opinion, how the economy, supply and demand, sets prices absolutely is self-regulating in a way. But you can't apply a logic of self-regulating when the economy has been tampered with, when it hasn't been left to its own devices to begin with. So guys, to me, there certainly might be some self-regulation, but I don't think this is naturally solved just because prices will eventually get so high that people stop buying things and prices will come back down. If that's the case, then we shouldn't be seeing skyrocketing and persistent high inflation in Venezuela and some of these other places that have struggled with this at times, like just as runaway inflation, right? So I don't think, I struggle with this first argument, this first path forward. I hope it turns out to be true. I don't think we see a soft landing, self-regulating inflation scenario. Scenario 2 for inflation is that it is solved through a very painful process called a recession. I think this one is Very likely, unfortunately. And so if you remember this, the narrative here is way back in 2020, in the second half of 2020, the Fed was actually saying, we're going to try to create inflation. And we want inflation. We don't even think we can create it. We want it. And then we all started feeling it a couple months later, near the end of 2020, beginning of 2021. And the Fed said, denied it, denied it, denied it. Well, I was doing an interview locally here where we were talking about, they were asking, okay, well, is inflation a problem? Is it real? Blah, blah, blah. And then how do you solve it? And I was talking to one of my other advisors about this prior to the interview. And Bill Mock, one of the all-star advisors, CFPs here at Korhorn Financial Group, said, well, you know, there's only one way to really deal with inflation, and that is cause a recession, cause demand across the board to get reset and come back down by everyone going through some contracting and some economic pain. And I think this is a more likely scenario. In fact, it may even be the scenario that the Fed is actually hoping for. They are communicating as if it's going to be a soft landing, self-regulating, blah, blah, blah. We'll be able to increase interest rates enough that things just naturally settle down. But I believe they know that that can't happen. That's just my guess. That's my belief, okay? I actually think they're more so hoping for a recession, which will naturally calm things down, calm demand down, and we can grow into this expanding or expanded money supply while the Fed tries to do a little bit of, trying to scoop a thimble size amount of money out of the bathtub, okay? So I think the second path forward is inflation calms down, maybe isn't solved or come back to the 2% or below level through a recession, but it is calmed down through a recession. Now, the third path forward for inflation is the worst one. And I'd love to tell you that it's not probable, but it is certainly possible. Whether it's probable or not, I think the seeds have been sown, and you'll see why. That we not just see inflation lead to a recession and then it calms down, but we see inflation lead to a recession, lead to stagflation. For those of you that aren't familiar with stagflation, this is one of the worst economic words out there, dirty words, bad words, something like that. And so here's what it means. Inflation is measured by economists as a broad increase in prices. Okay, that's what we're experiencing. But take a look here. Stagflation is a term that defines an economy that has some inflation to it, okay? Maybe not runaway inflation or maybe not double-digit inflation, but it's experiencing inflation, not 2% or below, whatever. It's experiencing inflation, but a slow and stagnant growth rate, meaning the economy is not really expanding. And you might even say it's gone through a contraction. It's gone through 2 quarters where it's been negative, and it's really not seeing a boom or expansion after that. And then it's also coupled with a high unemployment rate, which obviously you'd imagine the challenge here. You've got high inflation, so high prices, but the economy's not growing and people are not employed, therefore struggling. Those unemployed people are struggling with higher costs and they can't find a job because no one's hiring. This is obviously the biggest pickle that economists can deal with, okay? And so you might say it's not possible. We're not going to see stagflation. We saw it back in the 70s. We're not going to see it anymore. But here's why I say it's still possible, okay? Economic growth has already been weaned, okay? We obviously had a huge explosion after we printed all this money, after the big contraction of the COVID recession, but it has slowed down some, okay? Now, with more supply chain issues and with the consumer who's been healthy, now being a little bit more stretched, there's not as much margin. The savings rate has gone up and it's come right back down to pre-COVID levels. So the average consumer savings rate, they had all this extra money and they were saving it up. Now, guys, it is all the way back down to where it was before. And so now the consumer has adapted already. They've used up all their extra money, and it's possible we don't have as much growth from here. If we don't have as much growth from here, companies might start doing layoffs and doing cuts. I saw and heard of the first chunk of layoffs again recently. We haven't heard that term in 2 years since COVID. We haven't heard about layoffs. We've got the most job openings ever, right? There's more job openings right now than ever before, and yet I'm starting to hear some word about layoffs. I hope that reverses itself, okay? But if we've got structural issues because we've printed way too much money, we can't pull it out fast enough, we've got supply chain issues because of distortions in the global supply chain, that's going to keep prices high. And if growth stabilizes from here or is anemic from here, and companies start contracting their workforce, we could see stagflation. What's even scarier, take a look at this article here, the same one that defined what inflation was and stagflation was. Take a look at this. It's believed to be an unnatural occurrence in a weak economy because slow growth leads to consumer spending less, blah, 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 blah. All right. It's believed that stagflation will most likely never occur again in developed economies. It is true that during times of economic crisis, governments implement expansive monetary policies with the risk of causing inflation. However, the Fed no longer utilizes stop-and-go monetary policies such as increasing and decreasing the Fed funds rate. It sticks to a specific monetary direction and ensures inflation won't go above 2%. I'm not kidding. I'm not kidding, right? Just recently, when was this officially published? Well, it was updated. I can't see officially published, but updated just this year. Guys, that's astounding. You could have read that you could have read that 2 years ago and said, yeah, I mean, that's probably accurate. Right now, they've totally gone off script. The script that this paragraph is saying, that this article, this author is saying, yeah, we can't have inflation, stagflation again because these elements don't exist. They now exist. Therefore, guys, a possible track forward from here from inflation is to the dreaded stagflation. Not fun, guys, any of those paths forward. I mean, the first one I think is the least likely, unfortunately. I hope it turns out to be a soft landing, self-regulating, and so on. But that's not the one that I would bet on. To me, I think possible recession here in a year, 18 months, something like that, or possible worse situation, stagflation. Either way, make sure that you're managing your budget and your cash flow situation so that you've got enough margin to manage inflation, okay, number one. Number two, make sure that you're taking the right steps in your financial life, whether rain or shine, whether things are smooth sailing from here with the economy and the markets and your job, everything else, or we hit a rough patch that we can't even fully anticipate that's maybe embedded in one or two of those scenarios that I just shared, that you're taking the right steps in your financial life to protect yourself against big risks or emergencies if they come up, but also stay on track for your long-term financial goals. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.